Hello, you are welcome again. We are going to be looking at why order block does not work, or in other way, why order block does not get mitigated or tapped. All right. So we know one of those reasons. There are two major reasons. There may be a lot of reasons that price doesn't want just to go there. Price does not want to go to the other block, and one of the things that might have happened for price not to go to the other block is this. Number one is liquidity. What drives price is money, and whenever there is money in the market, price will move. Okay, so movement of price based on money is liquidity. All right, and liquidity based on our smart money concept is we have it in two different ways. Number one is inducement. All right, when price is making series of pullback, then the pullback that will be taken first is inducement. After that is our inducement. All right, then we have engineering liquidity. And we know engineering liquidity is the last pullback before an order block. Okay, so if price take inducement, when price is making those pullback, after price starts taking inducement, sometimes people want price to come to the other block, but price will not come to that block. Price will just continue to sell or continue to buy based on the trend. Okay, then the engineering liquidity that is very close to the other block, after price has taken the engineering liquidity, price can continue to sell or continue to buy. Okay, so what that is telling us is that what price is concerned most about is what? Liquidity, whether in form of inducement or in form of engineering liquidity, which is the last pullback before an order block. Okay, now number two things that may not allow an order block to get tapped or mitigated is what we call FEG. In my previous videos, you can check them out on this channel, TOBI TRUEMAN. I've talked about fair value gap, explain it with pictorial diagrams, all of those things. Please do well to check them out. Now, fair value gap, is the space between the series of order block. So if we have another block, and then between the other block, before the main order block will be mitigated, if there's a fair value gap in it, you'll see that price will tap into the fair value gap, and then the last block that needs to be tapped, price may not go there. All right, now this is a pictorial representation. You can see in this scenario, this is a downtrend. You can see price is making series of pullback. After price has taken inducement, price gave us this type of structure. This is break of structure, right? After break of structure, and then we now have another inducement, meaning that this market structure is confirmed. So what do we anticipate? We anticipate price to come after the inducement, price to come to this, after the break of structure, price to come to this first pullback as an inducement. And then if price give us this type of our entry model that we have discussed in the previous videos, if price give us this type of entry, we do what? We will enter. Then if price also come after taking out inducement, no entry, price can take out this extreme structure high point. After price has taken it out, we also look for our type of entry. If we see it, we enter. Now there are some things that will happen, when we see this type of our entry, either at inducement or at engineering liquidity. And sometimes also, I've explained the inducement for what? For inducement. I've explained liquidity for inducement. Now liquidity for engineering liquidity, we see that this is the last pullback before our main order block. Okay, so that last pullback there is called engineering liquidity. As such, price can also get to this engineering liquidity and give us our entry model. We take it accordingly in as much it means our criteria. Okay, now what if at each of this point 1, 2, and 3, price give us this type of structure, this type of our pattern to enter? Now this signal, we label it the first candle, then the middle candle is our number 1 candle, number 2 candle, and then number 3 candle. We can see that in between number 2 candle and number 3 candle, there's a fair value gap. If you don't understand the fair value gap, please watch the video. You understand it. Fair value gap. So between this fair value gap, that is the thing that is even bringing price, that is going to drop price to this other block. Okay, the fair value gap is going to attract price to this other block. So there are some time, because price knows that there are a lot of people that might place their order here at this other block. Okay, and maybe the other block is not even having enough volume or enough orders, but the candlestick has already printed here. So what price will do, since the major pulling factor is the fair value gap, price can just tap into this fair value gap, okay, and then continue the direction is intended without even tapping into this number one order block, this number one block or that candlestick. Okay, without price tapping into that candlestick, which is that number one there, without price tapping into it, what price will just do, price will come into this FEG, continue in a direction. So those things happen a lot. So for some trade not to be left behind, we can, instead of us, if we want to place this trade, we'll place it at what, the low point of this number one, and then put our selling this in there, our selling instrument. We'll put it here, right? So then we target, maybe this is where price give us this type of structure. We just target it. After doing that, and then we target the low point for selling. Then for buying, we do similar thing. So instead of us to put our selling instrument at this low point of at the point of that number one candlestick, what we do is put it at the high point of this number three candlestick. Okay, then our stop loss will also be at this high point of number one candlestick. So we put it there, and then we sell. So we are anticipating price to give us two scenarios. Price can come into the FEG. If it come into the FEG, good. Then if you also tap on this candlestick that's inside this other block, will be what will be tagged along with the trade. So we are putting our two in the in between this fair value gap and also for this other candlestick. So if price tap on the fair value gap, will be tagged along. If we tap also in the candlestick that is inside the other block, will also get tapped along. Now I'm prompted to make this video based on the signal I gave on my Twitter account. You can check it out. You see, the trade was a beautiful trade, but why it did not get tapped, that's what I want to explain now. We see that the trade is a beautiful trade, giving us what the entry I made was at this high point. Let me zoom in. This is what I'm talking about. You see, this is our evening star candlestick pattern, right? Our evening star candlestick pattern, it gave us, that's after price has taken inducement, right? Price took the 4-hour inducement, and then that was the reason for the signal. After price did that, then I placed the sell 2 here at this low point of this middle stick candlestick of the, this is the entire order block, right? Then this is our candlestick 1, our candlestick 2, and our candlestick 3. So I placed the sell 2 at the low point of this candlestick 1. Okay, so that is the reason why price did not tap into it. What price just did was that you can see in between this candlestick 1 and candlestick 2 and candlestick 3, in between this candlestick 2 and candlestick 3, there's what, a fair value gap. So price came into the fair value gap, tapped into it, and continued to sell. So on a normal, this trade was supposed to give us about 4 RRO, if I'm not mistaken. That's 4 risk to reward, about 4 risk to reward. Okay, but since it not get tapped along and our fair value gap is very close by, there are sometimes the fair value gap can be very wide. So but since this one is close by, I've learned my lesson that in subsequent trade I can put this sell 2 at this low point, so that if price tap on the fair value gap, like I've explained now, if price tap on the fair value gap, will get tagged along. If we tap also on this candlestick of this other block, will also get tapped along. So in this trade, we were left behind. Why? Because price made use of the fair value gap. instead of the candlestick inside the other block. I hope this is very helpful to you. Please watch my previous videos, like, comment, subscribe, and I wish you the best of luck. Have a great time.